All right, let's get a check on the commodities market now. We have Dumebi Oluwole now. She's joining us right here in the studio. Senior Associate, Financial Derivatives Company. Great to have you,
Thank you so much.
I'm sure you heard the previous conversation.
Yes.
It's all about diesel and how much the refinery is getting out at 1,000 Naira per liter.
Yes.
You know, at this time. And definitely this will have, impact, when it comes to the commodities market.
Yeah.
But it is still expensive.
From where we're coming from.
Right.
Yeah, you're very right about that. But I think it's best we look at what is happening now compared to what has been happening, let's say, about 6 months ago. So we've seen a significant increase in, energy prices, to be very fair. And that has affected, logistics costs, the transportation of food items, and that has now fed into food prices and contributed significantly to inflation. So what this means now is that we're getting diesel prices cheaper, right? And there's an increase in supply. The expectation now is that if this continues, the price of diesel could probably reduce even further if the supply is ample. And, this would start feeding into transportation costs, logistics costs, and possibly food items, because most of the trucks, or practically all the trucks that bring food from other states into states like Lagos are diesel run. So the expectation is that if the cost of diesel is reduced, there are chances that this will also feed into prices. But remember the conversation we had on Tuesday where I explained to you the lag effect. All of these things does take time. So today you might be seeing diesel prices trading at 1,000, for 1,000 Naira per liter, and you still go to the market. That tomato that you were buying, for maybe 60,000 Naira per basket is still 60,000 Naira per basket. It hasn't come down. And you just saw that truck coming from Lagos State and coming from maybe a Niger State into Lagos. And you're wondering, why is this not happening? Yeah, and you probably even saw the truck, getting refilled. I saw you. Why have you not, So the thing is, it does take time. It does take time for all of this to translate into lower commodity prices. And remember, diesel is just one function that's feeding into the price of food items. There are other things to consider. Remember that farmers are still struggling with a lot of insecurity that's affecting them producing. The planting season is also coming. It's also, also in lieu, and that is also feeding into commodity prices. Although there are positives happening with the Naira, the Naira depreciated yesterday, but regardless, over the past few weeks, we've seen the Naira on a positive trend, and that as well has also fed into prices. But still, point is, all of these things will take time to translate into a significant decline in food prices. We might say prices slow, just like what we saw in the month-on-month inflation for March that I explained to you on Tuesday. Yeah, so we might see some, trickle down in prices, but it wouldn't be so significant.
Because it's quite interesting, when you hear, about, when you heard about diesel prices, going up. We saw the prices of commodities move up, immediately, and we didn't see that lag. When it comes to when other prices actually come down. So I'm wondering, when it comes to consumer protection, at this time, do we force the sellers to say, you know what, we know maybe diesel prices have risen, at this time, but there has to be a lag effect before your price goes up.
I mean, if those mechanisms were able to be in place, the expectation is that they should be, because that's where social safety nets and consumer protection, like you rightly said, comes into play. And this is where, for instance, in developed economies, when price shocks like that are supposed to happen, everyone is aware. So the consumer knows that in the next few days, the price of this particular item is going to increase.
Not immediately.
Not immediately. So that's the kind of process or progress that we need when it comes to commodities markets in Nigeria. So that things to avoid, sellers taking advantage of the, sharp increase, where you see artificial scarcity, you see hoarding. You go to the market today, they're selling 1, 2, just because they know that, Naira has depreciated, or they want to, increase their price. And meanwhile, they've had that old stock and they're just trying to, make abnormal profits. But the thing is, like you rightly said, some level of consumer protection is supposed to be in place, where these price increases either happen staggeredly or they happen with enough sensitization that people are aware that in the next few days, price of this commodity is going to increase. Now, what that is supposed to hedge against is panic buying. And the expectation is that these announcements or price shocks, however way they are going to happen, everyone, the government will do their due diligence to ensure that people are not scared that, oh, by that time, there won't be any products in the market. Everything is going, so people obviously will take their time to increase. So this happens a lot of times in a period of 2 weeks, months even, for people to take advantage of it and get enough stock in place before the price increases now happen. The difference is that in a developing market like Nigeria, where businesses often do fight for themselves, it will obviously take time for these things to eventually translate.
So that's where regulation comes in. For the consumers at this time, because how much can the average consumer
actually take
at this time? Well, let's look at the CBN right now. We did hear the governor actually say it's not the foreign reserves that are used to defend, the Naira. We saw the reports from Bloomberg showing a relationship between the foreign reserves depletion and the Naira strengthening.
Yes.
They're moving in the same direction at this time. And I'm wondering, when the Naira was, depreciating, before, we did see foreign reserves actually decline. So what's the difference here?
That's exactly, I think, one of the things that we just need to take a few steps back to really analyze. The thing is, in times of economic crisis, it is expected that countries do draw down from their reserves to stabilize their currency, simply because markets do bet against the currencies in times of economic crisis. So what that period of support or intervention is supposed to do is stabilize the currency so much that these negative shocks are not too much, so that the investors that we want to bring in, the portfolio investors, the FDI investors, are able to bring their money in, and they do know that to some level, right, the monetary policy authorities are able to do the right things to keep the currency at a certain level, right, before their funds now come into support. And then the government is able to, boost their reserves back. And if you notice, because again, I always like to use the Asia 1997 crisis to explain things like this. A lot of these countries did the exact same thing, even with the support of the IMF, right? So this is not new. But I guess the reason why Bloomberg is flagging this now is because of the rate of depletion in the foreign reserves. Depleting your reserves during economic crisis is not wrong, right? But because of the rate of the decline in foreign reserves and the slow rate of increase in our export earnings, because right now it's somewhat like, okay, we're seeing oil production decline. So what that means is our export earnings from oil is going to decline. We're not producing enough cocoa to take advantage of the increase in cocoa prices globally. So what that means again is export or dollar earnings from another significant commodity might not be so much to boost the reserves back. So what's going to happen now? But the thing is, let's also understand Nigeria is in a state of an economic crisis, and the monetary policy authorities are doing what they can to solve this problem. So they need to keep the currency at a certain level. So these investors that we need to bring in will be able to bring in the capital that we need to further support the reserves. So while I understand the sentiments, I do not think it is something to panic about.
But that kind of sentiment and that kind of report by Bloomberg can cause panic.
I mean, not to the people that understand the fundamentals of the market.
Okay.
To a layman, it does look like, oh my God, our reserves are being blown off. But that's not really the case. We have to look at the economies that are backing this up. And there is no need for any panic. What is happening is not wrong. It's not new. These things happen even to the biggest economies globally. And during times of economic, I mean, if it was such a big deal, the IMF did release a report, it would have been mentioned in a very bad light. But that wasn't the case. So this is because things like this do need to happen in times of economic crisis.
But what do you see the foreign reserves in the short to medium term?
I mean, in the short to medium term, obviously, this trend will still likely continue, but not by, I mean, now that it has been flagged. And remember, you see, the Naira did depreciate. So what this means, it did affect market sentiment. And for the CBN to obviously anchor market sentiments positively, because there's such a thing as exchange rate expectations. And if they do expect the Naira to keep falling, foreign portfolio investors will be very cautious, and they wouldn't want to bring in funds. So obviously, the CBN has to now be cautious with this, come out with a statement and say, explain, be very transparent about what they are doing with the reserves, why the reserves are depleting, what measures they are putting in place to increase it even further. And this is where fiscal and monetary policy consolidation come into play. Fiscal authorities obviously have to do their part to ensure that the key sources of revenue for the country are actually increasing. Things like oil theft and vandalism, we should not even be talking about it anymore, because that is a key revenue for Nigeria. We cannot sideline that anymore. Whether or not we're trying to diversify the economy, we need to remember that right now the country is still very dependent on oil, and oil prices are high. So meaning that Nigeria should be benefiting from that. But that's really not the case, at least in dollar terms. In Naira terms, we've been seeing FAC increasing significantly to tell you that, okay, yes, in Naira terms, we're making a lot more. But in dollar terms, we're not. And this is where fiscal authority needs to come in. All the pressure can't keep going to the monetary policy authorities. Right. And I'm not an advocate for the CBN, but we cannot, we can't keep pointing fingers and then when they're trying to do the right things here in terms of adjusting and actually being on the path of orthodoxy.
So with this new law for the foreign reserves, you think it might stay this way?
I do think so. I do think so for the time being.
Right.
For the time being. But then again,
not going to go lower.
Even if it does, I don't think it will go. It will go past 32.
Okay. All right, we'll keep tracking.
We'll keep watching
the reserves.
Exactly.
You know, at
exactly.
this point. Yes. Thank you so much, Dumebi Oluwole. Always great having your perspective.
Thank you for having me. Thank you.